All right, good Thursday morning. We made it, almost, from Yahoo Finance New York City headquarters studios. I'm Yahoo Finance Executive Editor Brian Sozzi. You can see the opening bells on Wall Street doing their thing. They're ringing. And I have a power-packed 30 minutes for you today. Fresh with the no BS analysis on big tech earnings from Microsoft, Alphabet, and Meta that you are craving. I think all three of these quarters reaffirm the bullish AI investment thesis, and investors are going to have to just deal with these companies spending huge sums to bring AI glory to life. One quarter I hated, really, I absolutely hated it. Chipotle, like nothing from that report or their earnings call, and I will be sounding off on that one very shortly. It's just not a good quarter. Let's head to the NASDAQ and check in with Yahoo Finance senior reporter Brooke Palm. Brooke.
Good morning, Brian. It's a rainy day in New York, and we're off to a similar start here in today's trading session. All three major indices are slumping a bit in their early innings here. The NASDAQ leading that downward momentum, down about 0.8% in these early innings of Thursday's trading session. The Dow, the S&P 500, also moving lower. And that's really as investors try to assess this one-year trade truce between the U.S. and China. We also got comments from Jerome Powell that a December rate cut is not necessarily going to happen. And on top of that, too, investors are trying to understand and really bake in that earnings that we got from Microsoft, Meta, and Google. And as you can see here, NVIDIA is a stock that we've been watching all week. On Wednesday, that company, the way it opened, it crossed that $5 trillion market cap for the first time. It's up about 2.4%, but is losing just a bit of steam in the early innings here. If you take a look, reverse rather, to the percent, we are seeing a bit of a pullback here. It's down about 1% at the open, but Apple heading into that report this afternoon, we're seeing that move higher. Google, which reported yesterday afternoon, that stock's moving higher. Microsoft and Meta not doing too hot this morning. Microsoft down about 2%, Meta down about 12%. We'll get to more of that in the show, but this company really, after that earnings report, took a bit of a nosedive here. It's down nearly 12% in the early innings here. And I also just very quickly do want to take a look at food stocks, because we did have both Starbucks and Chipotle both report their earnings, and we're seeing both of those companies open in the red. Chipotle really taking a brunt here after it said that younger consumers are pulling back. That makes up about nearly half of its audience here, and that stock is seeing a really big tank this morning. It's down more than 19%. So once again, some downward momentum overall. A pretty negative picture here to start off the day.
The bottom really dropping out of that bowl on Chipotle shares. Thanks, Brooke. Appreciate it. All right, this is a huge morning for corporate earnings analysis. And look, I know you wanted to hear from me, sound off on Chipotle after that big drop that Brooke just mentioned, and Starbucks after their totally opposite earnings reports. I promise you, I will later on in the show. But right now, the only thing the market cares about are the clues from earnings reports out of Microsoft, Alphabet, and Meta. Jerome Powell popping the market bubble on Wednesday is important at the Fed meeting, but the driver of stocks we continue to be reminded of this year is the growth story that is AI. For me, the story of the morning is this: the mind-blowing amounts of money big tech is spending to invest in their AI futures. You can see this in the CapEx numbers for big tech found right on their cash flow statements. Get this. Microsoft, Google, and Meta spent a total of $78 billion on CapEx in the third quarter, up 89% from a year ago. Here's what stood out to me on these earnings calls. Meta CFO Susan Li all in on major spending.
We expect to invest aggressively to meet these needs, both by building our own infrastructure and contracting with third-party cloud providers. We anticipate this will provide further upward pressure on our CapEx and expense plans next year.
All right, Microsoft CFO Amy Hood, no slouch on spending either.
When you see these kind of demand signals and we know we're behind, we do need to spend. But we're spending with a different amount of confidence in usage patterns and in bookings.
And Alphabet CFO clearly keen on opening up his wallet to spend on AI.
We're continuing to invest aggressively due to the demand we're experiencing from cloud customers, as well as the growth opportunities we see across the company.
All right, let's crush it here with some analysis. Here on the opening bid roundtable, Crossmark Global Investments Chief Market Strategist Victoria Fernandez and Yahoo Finance Senior Reporters Brooke Palma and Inez Ferre. Victoria, coming out of the block with you here. Do you like to see how much these big tech companies are spending?
Well, I think it's what's driving the market, as you were talking earlier. So I'm not sure that I like to see that there's a decline in the growth of free cash flow, because that's one of the elements that we look at specifically when we're looking at companies to invest in. Not that they still don't have a tremendous amount of free cash flow, they do, but we are seeing the growth of that decline as CapEx spend moves higher. And I think there's going to be a lot more scrutinization on these spends. They go higher and higher. We need to see the monetization of this. And when you look at something like Meta, where they said it's going to be notably larger, right? Well, what does notably larger mean? It makes me a little nervous when there's just kind of this open-ended element that we're just going to keep spending more and more and more, and we have to wait and see what the results of that are going to be. For now, however, the market seems to like it. It continues to push us forward, and we know that CapEx, as you and I have discussed before, has a really large multiple on the economy in regards to jobs, in regards to productivity, in regards to wages. So it is a positive for the economy as a whole. I think it's just the magnitude of it that we have to keep a close eye on.
Out of these three reports, Victoria, which one did you really, really like, and why?
Yeah, I think we have to say Google just knocked it out of the park. Alphabet just did great. It didn't matter what you were looking at, whether it was cloud revenue, whether it was search revenue, YouTube revenue, daily active users for Gemini. I mean, everything beat expectations, and beat expectations pretty significantly. So I think that was probably the strongest support or strongest report that we had. I do think that Microsoft maybe got a little bit of a bad rap here. I thought their report was actually pretty decent. Yes, they had the write-off because of the loss in OpenAI, but otherwise I thought it was a pretty good quarter. There was a little bit of a concern around Azure growth going forward, but I still think it probably didn't deserve to have the stock pull back. It might actually be a little bit of a buying opportunity for that stock if you don't have it right now.
Inez Ferre, let me get over to you here for some analysis. Look, I've never seen companies spend at these rates. To hear a Microsoft, Inez, come out here and say, we're going to double our data center infrastructure over the next several years is mind-blowing. I mean, none of us were alive when they were building the railroads in this country, but maybe this is what it was like. What did you like out of some of these reports, and what gave you pause?
Look, just as Victoria was noting, with Microsoft, Wall Street is basically saying that they would buy the dips here. I mean, some analysts are saying that perhaps it was a subset of investors hoping for even more growth. But look, make no mistake, they're thinking that this was a strong quarter. As far as Alphabet is concerned, investors are basically saying, look, Alphabet is showing a return on investment. It's showing, like Victoria was saying, in all its businesses growth. And so Alphabet is, that's why you're seeing the stock up today. And then with Meta, it's more of they're playing a long game and growth over margins in the near term. And that's why you're seeing Meta going lower. I mean, we have seen Meta go tank in the past, and then it has recovered. But it's really, Alphabet is the one that's the standout. And what I thought was very interesting about Alphabet was also their Waymo, which I know that you're not as hot on.
No, I'm not hot on any of this stuff, but I may not have no choice. I may have to take a Waymo at some point, Inez.
Well, look, they're losing.
Okay.
Yeah, they're losing. It's losing money, but they're expanding into London. I mean, they are. They're really firing on all cylinders.
Wait, didn't you tell me yesterday that you would put your daughter on there for karate lessons?
I did, and you know what? And you know what they talked about on the conference call? That they have a teen service, and that's being used by parents. I'm telling you, moms do not want to be chauffeuring their kids around, and this is an excellent solution. That's what I was looking at. I mean, it's if you're talking about what stuck out to me in the conference call.
Well, look at Google listening and watching to Yahoo Finance's opening bid and getting tips for their earnings call. Brooke, I saw you here at the crack of dawn at your desk here in the Yahoo Finance newsroom in New York City, combing through a lot of these tech notes, and you really pointed out something good to me on Meta.
Yeah, we're hearing from just a slew of analysts. My inbox was filled with all these different earnings notes from analysts across the street. And Laura Martin over at Needham really pointed out this key point. We're seeing Meta really tank today. It's down now in the early innings nearly 12%. And what she pointed out was that Meta is explicitly prioritizing AI infrastructure over those near-term returns. And she went on to say effectively they're asking shareholders here to underwrite open-ended R&D, development here, and compute build out. And what's interesting to see here is we've constantly been talking about the forecast, the guidance, the expectations that these major build outs and these build up of these data centers really have investors trying to, lean into the hype and see that full picture. But yet we're seeing this pullback today and Meta clearly saying, hang with us, this is going to happen. But then you see that increase in spending now projected now to be $72 billion. It's a pretty significant amount. And investors clearly a little bit maybe fearful here about this rollout, but also maybe taking back some of the returns, profiting from this lead up that Meta has had. Year to date, the stock is still up about 13%. And so with this pullback, it's really trying to keep investors and shareholders on board to really trust that this process will play out.
Victoria, I'm going through these earnings calls last night. I have a nice little bit of whiskey in the glass. I'm liking what Microsoft did. Sales were good, Meta good, Alphabet good. I mean, over 300 million, YouTube subscribers and Google One, crush it. And I came away thinking, Amazon's report is really going to suck.
Yeah, I'm a little nervous about the Amazon report. Everyone is going to be watching AWS because of the growth that we saw in cloud from the other names yesterday. AWS has to really knock it out of the park. I think expectations are for around 18% growth for AWS. I think they're going to need to get up in that 20 number in order for the stock to really have a positive movement there. So that's going to be the main thing that people are looking at. And I am concerned as to whether they're going to be able to meet those expectations. And then there's going to be a lot of probably discussion around, they've laid off hundreds of corporate workers, what that's going to look like. Are they being affected by tariffs on their e-commerce business? How much is that going to bring down profits? So I think there's a lot of elements there that could maybe drag on the stock after the report. So we'll be watching to see what happens.
And as last word to you over there, suddenly it's great to be Apple. Apple was pretty much trashed for the better part of this year. We have no AI. Nobody wants the new iPhones, yet this company is going to come up here, they're going to report and probably have good things to say about demand for the iPhone 17, and then the Apple trade is suddenly back.
Yes, and suddenly it's back to the basics and back to what Apple does best, and it's the iPhones, and they're also getting into this smart devices inside the home. And so, look, they haven't had this massive AI spend like some of the other companies have, and investors are really now saying, starting to reward. Are you spending on AI effectively, or are you not, or is this a wait and see game? And that's what we're seeing with some of the earnings that have come out so far.
Oh, so many earnings, so little time to rip apart all of them. All right, my opening bid roundtable is sticking with us. We got a lot going on here today. We're counting down to a big day here at Yahoo Finance Invest. It's going to be NVIDIA-like huge on November 13th, starting at 8 a.m. Eastern. We've got a special full day of live coverage of the key themes driving the market, AI, crypto, and much more with the top people in corporate America you'll want to hear from. We have heavy crypto hitters, including Strategy Executive Chair Michael Saylor and Robinhood CEO Vlad Tenev, among others, personal finance legend, OG, Sozzi Orman, and the Shark Group CEO Damon John, also joining us with tips for how you can build your wealth. We're still adding names, like we're still in the trenches doing this. So we're definitely not done filling out our lineup. Don't miss Yahoo Finance Invest, November 13th. Save the date and tell all your friends. Tell them now. We'll be right back. Welcome back to Opening Bid. I wanted to shed some light on the sharp sell-off on eBay post-earnings Wednesday evening. The company ticked a lot of boxes. Sales, operating profits, and EPS all slightly beat analyst estimates. But Mark Mahaney over at Evercore makes a good point in explaining the stock sell-off. Fundamental trends were more mixed, with operating margins down 300 basis points year over year. The report also getting dinged as eBay served up a cautious fourth quarter outlook. This is just not the earnings day the street expected from eBay, a business that has been enjoying a nice turnaround under eBay CEO Jamie Iannone. Shares had gained 60% over the past year headed into this report. For more on eBay's reinvention, I just caught up with Iannone on my Opening Bid Unfiltered podcast. You can give that a watch on Apple, Amazon, Spotify, and YouTube, and you can read more on Yahoo Finance, as you can see right there on your screen. Time to fire up my stock of the day, and it's Chipotle, because it just needs to be. While I was listening to Chipotle's earnings call Wednesday night, the comment you are seeing on the screen from CEO Scott Boatwright immediately made me sit up. Boatwright pinning a weak quarter and weak start to the fourth quarter on the financial troubles of young people. And it makes sense. AI is ripping through the entry-level job market. 25-year-olds are still repaying loads of college debt. But here's the thing. American Express had a bang-up quarter a week ago. CEO Stephen Squeri told me his card business is rocking because of millennial spending and signups. Starbucks said on its earnings call last night it saw another quarter of strength at college campuses. Thank you, Protein Cold Foam. Its U.S. sales turned positive in October at long last. Another positive nugget there. Again, thank you, Protein Cold Foam. Let's get the opening bid roundtable to weigh in on Chipotle here. Brooke, I'm coming right to you, Brooke. You were on that Chipotle earnings call. You covered Chipotle for us. I mean, this was a challenging quarter for this company, challenging guidance, and it didn't seem like things got better in October.
Brian, the company cut its guidance for the third time this year, and that immediately gave investors some sort of pause. You saw the stock sort of decline. But once CEO Scott Boatwright said these comments about how it over-indexes to this young consumer, and as soon as he said that that young consumer is really pulling back here, that there's stress about other things like unemployment, increased due loan payment, and slower real wage growth, you immediately saw this stock take a turn during Wednesday's, aftermarket trading hours. And what's interesting here is that this is a trend that we have been seeing so far, these young Americans who are not going out as frequently. And it's worth noting, too, that the unemployment rate for young people, based upon the latest data that we have from August, is now at 9.2%. That's up from about 7.9% a year ago. And so clearly this demographic is struggling. And Scott Boatwright did hint that in Q1 they expect to see, a little bit more of this pressure and that it won't just turn around just yet, particularly for middle and low income consumers. He said in particular that Q1 is going to be the toughest for those two consumer sets that we've also been seeing. So two key trends that we really got some color into on the call.
Victoria, in my humble view, Chipotle's food tastes fine. I think it's great. But, how concerned are you that this is an economic issue for Chipotle? Or is this a marketing issue? Is this a value perception issue? Are there operational problems? I'm just trying to figure it out because I didn't hear that dreadful tone on Starbucks. I'm not saying the Starbucks quarter earnings call were great, but I didn't hear that same level of dread.
Yeah, I think there's a stark difference. And, maybe it's the Brian Nickel magic, who knows, going from Chipotle to Starbucks. But Starbucks is really kind of out there talking about their turnaround story, right? That back to Starbucks reconstruction kind of thing that they're doing. It's $1 billion project that they're doing. Chipotle, you're not seeing that same type of innovation. You're not seeing the protein drinks or an equivalent of a protein drink at Chipotle, something new that's there. Yes, they have certain meats that they bring in certain times of the year, but it's really not anything new. And I think you've got a lot more competition there too, Brian. You've got all sorts of new companies that are coming out that are doing kind of the same thing. In Texas, we have a Cabo Bob's down the street from Chipotle. We go there over Chipotle every time. We like the food better. It's the same concept. So you do have a weakening labor market, a weakening economy, especially for that lower earning cohort. You have more competition that's out there. So I do think it's going to be troubles ahead for Chipotle.
Inez, let me get over to here. Our head of news, Miles Udlin, telling me via Slack he's going out there to get Chipotle today. He's all in. I know Miles is a big protein guy, but let me ask you this. Have you cut down your Chipotle trips?
Look, I went there once, actually, a couple months ago, and the prices are elevated. They're high for what you're getting, and this is just from my experience. But on the conference call, you heard about tariffs, you heard about inflation. They're expecting inflation to still stay a bit elevated. They talked about beef prices and also chicken, and so. And they cannot hike prices that high with with these demographics, the way they're going, and the lower income and the ones that are making under $100,000. So you cannot hike the prices that high going into 2026. And they basically said they're not going to aggressively be hiking prices because you can't. There's only so much you can charge for a burrito bowl.
Victoria, last word to you. Would you be a buyer here on this sell-off?
I wouldn't be a buyer of Chipotle right here. I think they have too many headwinds coming. I would give it a little bit more time to maybe see the stock start to bottom out. And once you see an upward trend start to form, then I think I would make my move.
All right, let's keep it moving here from Chipotle to tech, or back to tech, I should say. OpenAI is preparing to file for an initial public offering as soon as next year that could give it a market cap of $1 trillion. That's according to Reuters. An OpenAI spokesperson didn't return my request for comment on this one. I want to put some context on this, though. OpenAI is the world's most valuable private company, as you can see, are courtesy of Yahoo Finance's private markets data. While $1 trillion would be a huge valuation, keep in mind, NVIDIA on Wednesday eclipsed a $5 trillion market cap for the first time. Apple's market cap is now over $4 trillion. My question of the day is this: should OpenAI be more valued along the lines of NVIDIA and Apple, or does $1 trillion look right because the company may not be profitable for years and has no consumer hardware yet? Victoria, what say you?
Yeah, I think it's really hard to put a really high valuation on a company that is not profitable. And I know we saw that with Amazon for years, and it worked out well for them. But you're looking at a company here that has a lot of capital needs. They've already committed to about $1.4 trillion in spending, and you're looking at an annual revenue run rate of about $20 billion at the end of this year. So they need to have a way to get some capital. It makes sense that they would do an IPO. I would look at it more along the lines of maybe a CoreWeave, somewhere in between a CoreWeave and that higher valuation. CoreWeave came at $23 billion, but it's increased by about 3 times since its IPO. So I do think it's something that will be beneficial for them, but I want to see that profit margin move up.
Inez, can you imagine on OpenAI IPO day, it doesn't open well? Oh my God.
Look, it would be the most looked at, viewed IPO. I mean, the most interest in this IPO because it is such a central theme of AI. I agree with Victoria that they have large capital needs, so this makes sense that they would go this route, but certainly it would grab tons of attention.
Victoria, let me get back to you. I think to justify this $1 trillion valuation, or even I would say something higher, they're going to have to come out with whatever they're working with on hardware with Jony Ive, and they're going to have to do it probably in the first part of next year before they hit that roadshow.
No, absolutely. They're going to have to show that innovation and show that they are growing in different areas. And part of that, too, is not just the hardware component, but it's the partnerships. So we've seen quite a few partnerships. Thermo Fisher, PayPal, obviously Microsoft is 27% they own of the for-profit component of this. So I think they're going to have to continue to prove to everyone that they are the leader, that they're going to continue to be the leader. That's going to give them that $1 trillion valuation, but they're looking to raise around $60 billion with the IPO. That's pretty significant. And they, if they do what they're supposed to do and what they say they're going to do, then I think they could probably reach that market cap.
Is it the safer bet here, Victoria, just to lean into Microsoft? Buried in that earnings release, it wasn't even buried, it was at the top of the page. I think they saw a 41-cent positive headwind because of their investment in OpenAI. If you are a big believer that the next year we'll see ever-rising valuations for OpenAI, why not just stay with Microsoft? They're crushing on hardware. They got Azure rocking again. Margins are holding up reasonably well. They have a good AI story to pitch. Why not just go that way?
Look, Brian, I am not the huge risk taker that a lot of portfolio managers are out there. So I completely agree. I think Microsoft is your better bet. Like I said, they have that 27% stake there. I actually said a minute ago, I would actually add to my Microsoft holdings right now because I thought their quarter was actually better than what the market was giving it credit for. So I totally agree. It's our largest holding right now in our large cap core strategy. So I think Microsoft is a great way to play this. You can always go in to OpenAI further on after the IPO when it's kind of settled down a little bit and you have a better feel for what their future looks like and what the growth potential is. But I think Microsoft is a great way to play it.
All right, awesome analysis, you all. Thank you to my opening bid roundtable. Greatly appreciate it. Coming up, Julie Hyman will stay on those big tech earnings on Market Catalyst. Don't go anywhere.